to list at a 14% premium to its IPO price. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I'm Ekta Batra and with me is my colleague Reema Tendulkar. Reema, what a day. We're building on gains over 3-month high for the Nifty. No complaints. Indeed, and there was this minor wobble, a drop that the Nifty saw at around 230, but that was bought into towards the end of trade. And the Nifty finally ending comfortably above 25,300. It's just been a strong showing for the last 2 weeks. We had 8 good days on the trot. We consolidated on Monday, saw a bit of profit booking. Yesterday, we were higher, and today, once again, markets closing up with a gain of about 0.3%. And the good part is banks led the action today. You know, we've been complaining that banks were struggling. Yesterday, it crossed 55,000 in terms of a headline number, and today, nearly at 55,500. Yes, absolutely. So no complaints really coming in for the markets. It is the Bank Nifty which really outperformed with a gain of around 0.6%. And what stood out is that there are slow and steady gains. For example, on a month-to-date basis, the Nifty is already up around 3.7%. So that's the kind of gain that we've seen on a slow and steady basis for the markets. And separately, just want to point out that the broader markets weren't left behind with a gain of around 5.6% on a month-to-date basis. So that's how the markets panned out. As of now, we have the Nifty, which is cruising at around 25,330. Let's see what tomorrow holds. But let's tell you what we have lined up and in store for you. We start with the top movers and shakers of the day with Hormuz. The cement space was buzzing in trade over a positive brokerage note and commentary, while MCX also jumped up. The SEBI chairman said they would allow banks, pension funds and foreign investors to trade in non-agri commodities. Last but not the least, we delve into the key market events to watch out for in tomorrow's trading session. But on to our first segment of the day. Hormuz now joins in to tell us all of the top movers and shakers of the day.
Hormuz. We've been mentioning right through this week that the banks will be the sector to watch out for, and it is delivering on that. The Nifty Bank today doing well. PSU banks were the ones that were shining. Some remarks coming in from the DFS secretary as well. And look at these gains. Gains anywhere between 3 to 4%, including those in SBI, and the low float PSU names like Central Bank, UCO Bank, IOB also did fairly well in today's session. Defense stocks continue to power up as well. Garden Reach, another day of gains for the stock. Zen Technologies was locked in a 5% upper circuit. Gains also seen in Data Patterns, IdeaForge and MTAR Tech continues to move higher ever since the management spoke to us last week, setting out some strong revenue growth targets for the next few years. Among the newsmakers, of course, Vedanta grabbed the spotlight in the second half of the trading session. It fell as much as 3%, but then recovered from the lows. Aditya Birla Fashion is the one that we wanted to speak about, ended 4% higher today. MCX and Dreamfolks are 5% lower circuit, and Hyundai Motors after that wage settlement announcement ending 2% higher as well. And lastly, stocks that ended at a 52-week high in today's session. Banco Products continues to move higher, another 8% added today. Affle had a good day. Shaley Engineering, Lumax Industries also a 5% advance here, ending at a 52-week high. Back to you, ladies.
Thank you very much for that. In fact, those were the top stock movers. Let's go across to our guest, Mayuresh Joshi. We were in conversation with him even on closing bell. And let me invite Shrikant Chouhan, EVP at Kotak Securities, on the show. Shrikant, let me start with you. We thought there would be some sort of resistance around 25,260, 25,300, but markets have comfortably eased past it. What next, technically? And what were the stocks that look interestingly poised for the next two trading sessions?
Yeah, good afternoon, everyone. So for Nifty, it is very clear that it is heading higher. It has crossed its previous swing high level, which was around 25,150. And now, yes, it is facing resistance because after hitting the levels of 25,350, 400, we can see almost 80% retracement of the entire fall that we witnessed from the levels of 25,675 to 24,300. And most of the time, whenever the market retraces 80-85% of the entire fall, we see some profit taking in the market. But the way the market recovered, and there is a broader participation in the market, I'm to say banks, PSU banks, as well as Nifty IT index, it's supporting in this up move. That means the broader strength of the market is much, much better. And in case if there is any correction, then it will be an opportunity for creating furthermore long positions. Now, the market should not break the level of 25,000. That's the condition to watch out for. And in case if it sustains about 25,000, then there could be very high chances of crossing 25,675 and eventually maybe 26,000. So broadly, I'm of the view that tomorrow, because of any reason, market corrects backs to the levels of 25,150, 100. There we should look for taking some contra bet of going long in the market.
Okay, all right. Well, let's talk about the big stock of the day and the big debut. The new age tech firm Urban Company saw a stellar debut on the exchanges, listing at a premium of 60%. Manglam is here with all of the details on this excellent debut. Manglam, over to you.
Well, it was a stellar listing indeed for Urban Company, and this is a company that, moves unorganized daily home services into the organized industry, and the street really liked it. For starters, the issue was very well bid for. A 1,900 crore issue saw subscriptions of over 104 times. Interestingly, while the qualified institutional investors led that, we also saw oversubscription coming from HNIs, the retail investors, including the employees of the company that subscribed to the issue by over 37 times. So that was a big positive, or that told you that there is going to be a big up move on the listing itself. The other reason why the stock did extremely well was the overall size of the opportunity. Less than 1% of this market is organized right now, and the street believes that this will likely grow faster. And as we've seen the case with platform companies, as they turn a corner, profitability rises exponentially as well, and that's what the management had said too. They are looking at profitability over the last few years. The 700 crore incremental revenue that they've added, that's translated into 300 crore plus EBITDA. They also have the extended business of hardware native, which is showing good growth, and operating leverage is likely to play out there as well. The street believes this 35% revenue CAGR, if that continues, and the operating EBITDA margins doubles from current levels of around 1.5%, then maybe the stock at around 100 times, given the growth potential, is not particularly very expensive, largely because of the growth potential that we've seen. Mind you, the market cap of Zomato is over 3 lakh crores. That of Swiggy is over 1 lakh crores. Even after a big stellar rally on day one, Urban Company market cap is just around that 26,000 crores.
We see our business in parts. There is the very profitable core in India, which is growing well. It has been profitable for the last year or so. It had a 3% adjusted EBITDA margin as a percentage of NTV last year. That went up to about 4% in the first quarter. And I think that core will have to continue to compound well, grow well, and continue to compound profitably. The new segments where we are, which is InstaHelp, Native, I think these are the areas where we will invest. And at the right time, hopefully either in the first or the second earnings call itself, we will come out very, very clearly to investors with how long will that investment phase last, what is the capital we would like to deploy.
A lot of thoughts running in my mind at the same time. Right from times we spent together in college, when we, after college, decided that we need to get together and do something in the service of India over the next many decades, to the many months the three of us spent the streets of Delhi trying to really identify what business we should build that will create large impact in the lives of millions of Indians and be a company that they will look forward to, a company that will make a difference to their daily lives. And then, like a fast forward of the last 11 years, while I was trying my best trying to hold emotions back.
All right, so that's the big debut. But let's move on to the cement sector now. Stocks such as Ultratech Cement and Shree Cement gain, buoyed by ratings upgrade from global brokerage firm CLSA. Nigel is here with the details on why CLSA is betting big on the sector. Nigel.
Well, that's right. CLSA came out with a note on cement, and they are turning more constructive on the space as they see an uptick in terms of profitability. The few points that they mentioned, they are estimating upgrades for companies which will be helped by pricing discipline and also will be helped by coal cess elimination. So that's what's broadly going to help them in terms of profitability from here on. They go on to say that Ultratech is best placed to benefit from cost savings initiatives as well as the organic expansion that they have already announced. In terms of preference of stocks, they upgrade Ultratech to the high conviction. They have an outperform rating out there. The target price they placed at around 14,700 rupees per share. Shree Cement out there as well, they've upgraded to an outperform. The target price at around 33,500. And Ramco, they've upgraded to hold. The target at around 1,040 rupees per share. They maintain their outperform rating both on Ambuja Cements as well as on Dalmia Bharat. So CLSA turning more constructive on the cement space for a whole host of factors. Back to you.
Thank you, Nigel, for that. Mayuresh, there is a lot of optimism going, for the cement companies. In Q1, also we saw a recovery in EBITDA per ton, and the expectation is pricing will hold, the EBITDA per ton, the realizations will remain fairly healthy for the full year. Do you like cement as a sector and your preferred pick?
Yes, we do, Rima. And again, I think the rationale that has been put out in terms of reasonable volume growth expected Q3 onwards, I think that should sustain quite reasonably. Second, I think the consolidation that you've probably seen in the industry and are witnessing in the industry as well, that will lead to better pricing. Third, I think the input costs have largely stabilized, which now means that along with the internal power dynamics that is taking place, whether it's waste heat recovery or otherwise, the overall cost should start coming down. And a combination of these factors will mean that volume growth should sustain going forward, pricing should be in their favor, margins should show improvement, which means the reported EBITDA on an absolute basis and EBITDA per ton should see sequential improvement as we head into the next few quarters. Obviously, I think the capex from the government when it comes to rural, urban, affordable housing, infrastructure should sustain, obviously aiding and abetting the entire growth that one probably looks at. So yes, I think positive on the sector as a whole. Out of the large stocks, large cap stocks, Ultratech, JK Cement is something that the ratings and rankings look extremely fine as far as Marketsmith app is concerned. Within the mid-cap universe, what we've kept on our radar is JK Laxmi Cement, with capacity expansions expected and all these factors acting as tailwinds.
Okay, Shrikant, would you have any view on the technicals of a couple of these counters? On a week-to-date basis, the likes of Ultratech, JK have rallied around 2.5–3%. Any upside from here on?
Yeah, I think like Ultratech Cement or even if we consider Shree Cement, both are very close to their resistance levels on long-term charts. But if we consider the technical pattern of Dalmia Bharat, then there we can see furthermore continuation in the near term. Currently, it is around 2,500 sort of levels. It is forming ascending continuation triangle formation. And on the dismissal of the level of 2,500, we can see the levels of maybe 2,750 or 2,800. So there is like more juice left for Dalmia Bharat as compared to Ultratech or Shree Cement. But yes, in that space specifically, I'm going to say out of these two stocks, Shree Cement should do well. It is very close to its resistance, but overall formation is suggesting us that the stock can perform from here.
Got that. Let's move on then to the other big story. In a boost to commodity exchanges, SEBI chairman has said the regulator would permit banks, pension funds and foreign investors to trade in non-agri commodities. He said this at the sidelines of an MCX event. He added that boosting the commodity market is a key priority of the regulator. Listen in.
Strengthening India's commodity markets is high on SEBI's regulatory agenda. We have, in fact, I would rather say, development agenda. We have already constituted a committee to recommend measures for deepening the agriculture commodities segment. We'll also constitute a working group for developing the non-agricultural commodity space, including metals. Enhanced institutional participation will bring in higher liquidity, making the market more attractive for hedging. We will keep working towards a regulatory framework to enable prudent institutional access to these markets. A proposal to allow FPIs to trade in non-cash settled, non-agricultural commodity derivative contracts is also currently under examination. We will also engage with the government to consider banks, insurance companies, and pension funds to trade in these markets.
Okay, and MCX in fact rallied after the SEBI chairman said that the market regulator would allow banks, pension funds and foreign investors to trade in non-agri commodities. In fact, she's here, joins in with more details. Vamakshi, it's a big boost for commodity exchanges.
Well, absolutely, Ekta. Now one of his comments, that is, they were currently examining a proposal to allow FPIs to trade in non-cash settled, non-agri commodity derivative contracts. That is an important one. Now, keep in mind that FPIs are already allowed to participate in the cash settled non-agri commodity derivatives. And in fact, in their annual report, which they released on August 12th, they had indicated that they would review this existing framework and explore alternatives to allow FPIs to invest or rather trade in non-cash settled non-agricultural commodity derivatives. Now, why is this important? Because currently, since they are only allowed to trade in the cash settled contracts, crude oil and natural gas mainly is what they're restricted to. But, and if you look at their share as well, analysts say FPI share would be around 5% in total volumes, 8% overall in the energy basket. Now, with the regulatory approval, if that does come through for the non-cash settled contracts, they will also be able to participate in bullion as well as base metals. Now, the other comment that came in from the SEBI chairman was on GST-related challenges. They believe that they will be engaging with the government in order to solve these challenges. And analysts say that in the past, this was one of the key issues in order to, that was sort of challenging the pickup in volumes. Now, it's positive for MCX, likely to boost liquidity, deepen India's commodity markets and likely to boost volumes as well over the long term.
Thank you. Let's move on to the other stocks in news. Dreamfolks hits a lower circuit as it exits the domestic airport lounge business. The other one is Aditya Birla Fashion, which gains after a new brand launch. And not to forget, we had a second listing today, not just Urban Company, though that stole the limelight. The Shringar House of Mangalsutra also had a good debut, surging 14% at open, closing 12% higher. Gaurav is here with the details on all these three.
Well, let's talk about Aditya Birla Fashion. Now, this company has said that they have opened a new value retail brand owned. Now, this brand will actually replace their existing brand Style Up, and company has also said that by the end of FY26, they will have around 100 stores with this brand. Now, company also says that owned is inspired by youth culture, and this also resonates the value-driven Gen Z. So, definitely, this is something that the market has taken in a positive way, and as a result, we saw some uptick in this counter. On the other hand, when we look at Dreamfolks, company has said that they have discontinued the services at domestic airport lounges. Now, if we look at the revenue proposition, around 93% of their revenue comes from the lounge services. And if we look at domestic lounges, they had around 76 domestic lounges by the end of Q1 FY26. So definitely, that is something which is going to be materially impacting the company's numbers. And as a result, we saw some reaction in the stock price as well. And let's also talk about Shringar House of Mangalsutra now. This company recently made its debut on the stock market. Today, at the IPO price was set at 165, but it made its debut at a price of somewhere around 188. And they also closed with a gains of around 12%. So definitely a decent set of number in terms of debut is what we can call for this company in a day today.
Okay, all right, Gaurav, thanks very much for that. So yes, interesting set of stocks there. Mayuresh, wanted your quick opinion on all three of them. Aditya Birla Fashion and Retail with a new brand. We have a new listing as well. And separately, your thoughts on a couple of these broader market stocks.
So I think as far as Aditya Birla Fashion is concerned, I think Pantaloons was flattish last quarter in terms of revenue growth on a year-on-year basis. The ethnic business probably did very, very well. The TMRW vertical did excellent as well with the maximum amount of growth. And therefore, I think the organic growth momentum might very well continue. Margins actually inched up from 7.3 on a year-on-year basis to 9.3. And the shift that you're probably expected to see with discretionary spending expected to go higher as the festive season begins, I think that can probably provide more momentum and boost, both in terms of top line and margin. So the momentum can continue, but we'll still wait out for Q2 numbers. For the new listing, I think not really covered that, so very difficult.
Thank you, gentlemen, for joining in today. Need to get into a break. On the other side, we'll get you the top corporate voices along with the key market events to watch tomorrow. Stay tuned.
Welcome back. Well, now let's go across to our corporate corner. First up is Yatharth Hospital. It recently acquired Agra-based Shanti Ved for 260 crores. The management stated Agra is a very promising market for the hospital chain. Further, it expects 10% annual growth in average revenue per occupied bed for the next 3 years at Shanti Ved. Further, it anticipates occupancy in Shanti Ved to triple in 3 years. The hospital chain is committed to expanding through brownfield and greenfield projects. It plans to fund such deals with internal accruals going forward.
Okay, moving on. The management of Laxmi Organic Industries is optimistic on the growth opportunities coming in the fluorination segment. They expect to achieve peak revenues of 200 crore rupees in fluorination in FY27. They also expect to hit about 100 crores of fluorination revenues in FY26. The company has overall outlined 1100 crore of capex. And this includes the expansion of 75 crores immediately in the fluorination segment on account of the Hitachi deal. As I said, the phase 1 is about 75 crore rupees.
Okay, and before we wrap, we'll bring you some key market events to watch out for. Gaurav's here to tell us more.
Well, let's talk about US market. We will get jobless claims data, so that is something that we will be watching out for. But other than that, there are a few things and much more action happening across the central banks of the world, because FOMC meeting now it is scheduled, and we will see some rate cut decision if they will go ahead with rate cut or not. And it will also be followed by Mr. Powell's press conference. So definitely that is something, a key event to watch out for. Other than that, from UK, Bank of England's meeting is also scheduled. There also we will see interest rate decisions. Let's also watch out for that event. And from the Japanese market, now Bank of Japan is also scheduled to meet between 18th and 19th of September. So definitely we will be watching out on what is happening on the interest rate front across all these central banks. Other than that, from the Indian market, we do not have anything specifically to the companies, but Piyush Goyal is going to visit UAE from 17th to 19th of September. Now Ministry is going to meet counterparts, and he will also expedite the work on Bharat Mart in UAE. At the same time, they will be also exploring some pathways to access the African market. So definitely in an environment where many macroeconomic activities are happening, let's also watch out if something unwinds from this meeting from Indian market perspective.
Thank you. But as you said, top of the agenda will be the rate cut decision. 25 basis points seems to be priced in by the market, widely expected. The question is pace of easing thereafter. That brings us to a close in this edition of Markets Forward. Thank you for watching.